Hi, John.
Hey Simon, I'm not going to ask you where you are, just what time it is.
What time? Almost 5 p.m.
5 p.m. You must be very far away. That is 10 hours um, in time zones from the U.S. Pacific Coast, from Silicon Valley. And let me calculate how many nautical miles that is. 60 miles per degree.
GMT
Uh,
plus 2 hours ahead of the UK.
right. Uh, so 60 degrees per minute times 60 times 10. I'm a licensed navigator, by the way. Um, you are roughly 8,000 miles away. Okay.
That's pretty
Well,
good.
thank you for postponing dinner, I should say.
Yeah, straight afterwards.
Right. Well, go ahead and get your PowerPoint up. Uh,
Okay, let's share the
Simon is a
screen.
veteran trader, elite coach, and founder of TradeSmart with over 20 years of experience training market participants worldwide. With a first-class honors degree in computer science and a background as a proprietary equity trader, he brings a unique, holistic perspective to trading. Simon focuses on both market mechanics and the human side of performance, helping traders conquer common pitfalls like hesitation and fear. Please welcome Simon Klein for his presentation, How Professional Traders Read Price Without Indicators. Okay, Simon, well, I see you have How Professional Traders Read, and you have until 5 minutes before the hour when we hand out my next batch of prizes. We're going to go ahead and mute ourselves, and you have the floor.
Okay, thanks for that introduction. And it's great to be here. Thanks, John. And welcome, everybody. So, we're going to go over how professional traders read price without indicators. So, this is price action, price structure. And hopefully, you'll walk away from today's session with a deeper understanding of how to read the market. There's a quick disclaimer before we begin. And so, this is our agenda. So, this session is about how professionals read price, not trade signals or shortcuts. We're going to ask the question, why am I always wrong? And again, that is the question that many beginner traders or even more experienced traders ask if you get on the wrong side of the market and the market immediately goes against you. It's like, why did that happen? Then I'm going to take you through professional chart reading, and you won't find this in any book. It's based on over 20 years of doing this every day. And we'll go a little bit into supply and demand, and then we'll take what I've taught you into the live market. And again, if you come up with any markets you want me to look at, if we can chart it, we can look at this. And we can look at stocks, Forex, futures, Bitcoin, commodities, and then I'll open up for audience questions at the end and hopefully give you some answers if you have any questions. Um, Here's a picture of me giving a live presentation. This was pre-corona in New York, and I was also invited to speak to the Bogo Investment Forum in China, which was kind of interesting. You may be familiar with some of the authors here, some of the speakers, and this is Jack Schwager, author of Market Wizards. I'm sure most of you have read some of his books. They're well worth a read, and there's various other traders. Here's a little bit more about me if you want to read a bit more. Most recently, in my third year of a PhD program in lifestyle medicine, and that's extremely interesting because the skills that I'm learning in root cause health coaching, I'm applying now to traders to get to the root cause of some trading issues that are kind of the reason why traders are not succeeding, even though this is people that have a working trading plan and they've proven it works, but they can't get themselves to do what they know they need to do because of some root cause issue that we need to get to. So again, this is very interesting and very helpful and useful to traders. TradeSmart, we're a trading education business, and we focus primarily on teaching you how to read the market professionally and also how to run a successful trading business. You need both. And that includes how to develop your own trading plan and strategies which fit your personality and lifestyle. Again, you can trade someone else's system, but you have to make it your own first, and then it becomes your system. You have to own it, and it has to fit you. That's the key. So let's go over the one of the first questions is why am I always wrong? Or it appears to be that I'm on the wrong side of the market. Now, when I first started learning how to trade, I sat on a professional trading floor, and there were two traders there who were very successful, and they trained me. So what used to happen is I used to look over their shoulders and see what trades they were in. And invariably, if I called the trade out, they were on the opposite side of the trade. I was the counter indicator. So at least at the beginning, if I called out a trade, I'm going long, they would just take the opposite side of the trade, and invariably they'd be on the winning side. So it's easy to think inconsistency comes from not knowing enough. But in practice, it usually shows up when decisions are made under pressure without structure. That's why a framework matters. That's why you need a framework. And I'm going to share with you the framework that I use every single day, and you can start using yourself as well. So here's a problem. Why am I always wrong? So this was me as a beginning trader. I may have, used moving averages or other way of reading the trend, and I'd recognize an uptrend. And once I recognize the uptrend, I'd take a long. I'd go on the buy side. And the market would go a little bit in my favor, and then it would turn against me, and I'd start to look at the screen. And at the beginning, as it went against me and more against me, maybe I'd freeze. I was like, pretty nervous at the beginning. And I'd freeze. I want to get out of the trade, but I can't because maybe it's turned around and then it goes down and down and down. And then I take my losing trade and I think, okay, this is not good. I got on the wrong side of the market. The market must be going to the downside. I read it wrong. So I'm going to double up now and make that money back. I have to double up because, it's got to make that money back quickly. That's what a lot of people do. And I did that at the beginning as well. So I take my second trade on the short side. I've got double the position on and it starts to move in my favor. And I start to see my P&L going, making that back. And all of a sudden the market turns around and I have to close out. And the second losing trade is even bigger than the first one. And I'm like, okay, I'm on the wrong side of the market here again. Close out. At least I'm taking a loss, but a bigger one. And then I decide I'm going long. I got the direction wrong. It really is going up. So I take my third trade over here. And again, it comes down against me and I take my third losing trade. So I'm like, okay, I learned about, trend, but there's something else going on here. Maybe this market's range bound and this is like resistance and that's support. So every time it comes up here, I must be on, maybe it's best to be on the sell side. So this time I'm going to take a sell when the market comes up here. So I'll take my fourth trade over here. And I'm hoping, not a good word to use, we called it hopium. It's a bad word to use in trading. We don't really hope, we trade odds, but that's a story for another time. So I take my fourth trade over here and I'm going all out. I want to make everything back. And I'm pretty confident because every time it came up here last time, it went down. So I'm like, I'm looking for the market to move down here. And all of a sudden, the market carries on in the direction it was going in the first time, these times. And I end up with my fourth losing trade. Now, it's interesting to note, if we go back, that if I would have kept this trade on and put my stop down here, this would have been profitable and so would have this one. So would have this one. So that's interesting to note. So again, that's also where you put your stops and how you manage your risk. The trade could work out ultimately, and you're not in the trade because you've not understood how to manage price movement, how to manage the market, understand where the market's likely to go from and to. And what you're missing is understanding these areas. These are called supply up here and demand. And this is a supply become demand when you break through a zone and invariably trap people on the wrong side. Sometimes you have to understand how this works. Sometimes these are bull trap scenarios where you trap buyers on the breakout and then it comes down and takes out the bottom of the base. Again, we go through these things in our trading room every single time as the market is playing out, before it plays out, explaining exactly what's likely to happen, what the probabilities are, usually around 80 to 90%. And the traders in the room see ahead of time, this is what I'm reading, this is what's likely to happen. It doesn't happen all the time. Remember, the 10 to 20% of the time, it doesn't happen. The market's not going to always play out according to the odds, but most of the time it will. So this is what you need to learn. And you need to understand when is the market, what are the odds when the market's likely to turn and when's it likely to break through. And that's what we go through in our trading room and we explain as we're going through it and also in our training as well. So let's teach you now something about how to read charts. And again, when I first started learning how to trade, I was taught the specialist system of the New York Stock Exchange. This was over 20 years ago. And the problem is, we were taught to spot what the specialist was doing and trade according to them by watching what was going on the time and sales and the prints going off there, as in the trades, and also looking at the open book, which is the level 2, level 3, well, level 2 of the so you can see the market, the bids and ask above and below price. Now, the problem was when the market or when the New York Stock Exchange kind of brought technology in to do the job instead of being completely human, it was now partly computer. And we call that disruption. So the system that I was taught no longer worked. That's why, the company I was working for, or the floor, closed down. We're no longer profitable. The system didn't work anymore. And I went to work for a different trading floor. And it was back to the drawing board, and I had to come up with a way of reading the market and trading that was timeless. I didn't want it to be disrupted again by technology. And that's really important. You don't want to learn something, invest time and energy and money into it, and then it doesn't work. And then you have to kind of pivot again and again. So this way of reading the market will, in my opinion, never change because it's based on sound principles and foundations of how every single market works, and that will never change. So most traders aren't trading the market. They're trading interpretations, indicators, patterns, opinions. Professionals strip away that and focus on one thing, where real buying and selling must occur. So this is why this system works. And I was thinking about this yesterday, and you can think, does this work? If you think about that, it's not really the right question because it's like saying if we take the analogy of driving and you're driving on the road and you see a red light and you were taught that red light means slow down, stop. And you're saying, well, when I see a red light and I stop, does that work? What do you mean, does it work? That's the way to drive. What wouldn't work is if you hit the gas and went straight through the red light, that would be pretty dangerous. But if you follow what you're seeing and what the market's communicating with you in the language that markets communicate, which is what I'm going to share with you now, then you pretty much know what's going on all the time or what the probabilities are. And if something else happens, you've got your finger on the pulse of the market and you can adjust and flow with what the market's telling you. Now, again, that's very important when you're trading, that you don't get into flight or fright. You don't get into the sympathetic nervous system, because then what happens is the part of the brain that's involved in making decisions based on logic and everything, which is what you need when you're trading, switches off and you're in survival mode. And in survival mode, the brain says, get me out of danger. That's not where you need to be when you're trading, because then you're going to make the wrong decisions. And invariably, if anyone has ever been in that situation, what you usually do is get out of your trade at the wrong point or just at the point where it turns around and carries on in your favor. And it's also obviously very important to follow your trading plan. But let's go over this. Now, this is why this is very important. And let's start with this down here. The charts will teach you all you need to know once you have a framework for reading them. If you have a framework for reading the market, then guess what? Use that framework and you can now start to learn the market yourself. What do you see happening once you know what you're looking at? It's much like the same as driving. You've got the general principles of driving. No two people drive exactly the same. Everyone's got their different style of how they drive, but you have to abide by the rules of the road to keep safe so that you don't have any accidents. You have to be aware and anticipate what other drivers are going to do and drive differently in different road conditions. Much the same as trading. Different market conditions require different way of trading. Certain strategies don't work in certain market conditions. A range-bound market is different to a trending market, and a transitioning market is different to a range-bound market. You have to know what market you're in and trade accordingly until it becomes clear. So you have to be able to read the market in order to match the way you trade to market conditions, much like the analogy that I like to use of driving. You have to match the way you drive to road conditions, to weather conditions, and the like. So these are the things that I came up with. And the reason there's really three. The fourth one here is time. Okay, it's looking at multiple time frames, which is kind of zooming out and zooming in, top down, bottom up, if you want to put it like that. So the pivot analysis is our way of reading trend. So just with trend alone, you can do really well. Supply and demand analysis will tell us where market has to move from and to. And emphasis on the word has to. That's where business needs to be done. If you were a salesperson and there was a big order somewhere, far away, you'd probably have to go there to fill that order because that's where business is to be done. So the same thing with the market. Yeah, it's no different than any other business. If there's a big order at a certain area, the market almost has to go there to fill that order because that's where business is to be done. This is supply and demand. And price direction is everything that you need to know pretty much about Japanese candlesticks in one word. Up, down. There's two words, but you only need one of them. Is it going? You ask the question. It's binary. Is it going up or down? That's the only thing that's interesting. When you're looking at a Japanese candlestick charts, your question is the market direction up or down? And we can teach you how to do that very quickly in literally seconds. You can look at any market and know if it's going up or down. Now, the beauty of this is if you put all this together, you've got a three-prong approach and it's solid. Imagine a table with one leg, it's wobbly. You could still work, it could still work, but two, wobbly a little bit. Put three, it becomes stable. This is a three-prong approach, which gives it stability. And then we zoom up and zoom out, zoom up and zoom down, zoom in and out, like a helicopter view, bird's eye view, and then zoom in. We look at the big picture and then we go into the smaller picture to make sure that we're aligned. Sometimes we go bottom up because sometimes a smaller picture can affect the way the bigger picture plays out. And again, this is a skill that you need to develop when you're reading charts. And the beauty of this is once you know this, you can apply it to any market, any time frame. It doesn't matter what market you're trading or what time frame, what instrument you're trading, makes no difference. You can trade options, futures, Forex, the spot market, anything that you want. And again, I want to bring your attention to here. The charts will teach you all you need to know once you have a framework for reading them. You don't need anyone else. You just need yourself. You just need to know the framework and then start applying it and see what you see in the market. And then you can move on from there. But that's the most important thing. Now, again, if you come into a trading room, for example, into our trading room, you'll see this in action every single day and you'll learn by watching and then by doing this yourself. So let's go back to basics. And I'm assuming everyone here knows these two candlesticks. Now, let me ask you a question. This candlestick on the right, is this candlestick bullish and bearish? And I want you to type it into the chat area or write it on a piece of paper if you're watching the replay and you see if you get this right. You get this candlestick on a chart. Is this bullish or bearish? Is the market likely to go down or up after you see this candlestick? Let's see if I can see a chat here. I don't think I can, or do I? One second. Chat. Here, chat. Okay. Okay, so I'm seeing bearish. Bearish, up, shooting star is bearish. Okay, yes, it's a shooting star. Good job. Okay, so let's take this on. Now, this is why learning basics, yeah, without having foundations, this is the difference. Basics is not the same as foundations. Okay, you need foundations and then basics and then build on that. If you end up building a beautiful house, for example, without putting foundations down, the structure might look good, but it's not going to last. It's going to fall down. The same thing with most people's trading. If you're looking at strategies without the foundation underneath what they're built, then it's not going to work for you. And again, you can just look at the success rate in the industry as a whole, and you'll see that it's not very high. Now, imagine if you were going to learn how to do something in university, say becoming a doctor, and the pass rate of becoming a doctor was less than 10%. You'd say there's something there's a problem with the school, isn't there? With the medical school. Why are so many people failing? So that's a question I ask myself with trading. Why are so many people failing if they've got a strategy? Well, because they don't have the foundations underneath which the strategy is built. If you're an architect or whatever, and you don't have, an understanding of engineering and how structures, how houses, civil engineering, for example, then you need to understand how deep the foundations need to go down to hold a certain number of story building. The same thing with trading. You need to understand the foundations in order to be able to trade, and you need to understand what that's built on. So let's go through this. Everyone's answered this. And this is the same question that I asked to a group of traders at the New York Traders Expo, actually live. And almost everyone put their hand up and they said this is bearish. So let's have a look. Let's look at an example of this. So you see a market like this, and you see a candle after a number of bars to the upside. Okay, this is an hourly chart. And you see the market moving to the upside here. Actually, it could be a daily chart. No, it's an hourly chart. And yeah, hourly. So you see the market moving. You have 1, 2, 3, 4, 5. It doesn't really matter what time frame it is. And you get a bar like this. Is that bar bearish? So let's have a look. What carries on? And this is the picture of what happened afterwards. And then actually, this is what we had in our trading. I said in our trading, when you have a bar like this, it's actually bullish, not bearish. In this case, it's bullish. Now, why? Let's go back to the framework and ask 3 questions. Remember, we only have 3 questions. We're looking at one time frame here. So what are the 3 questions we asked? What's the trend? So let's have a look at the trend from the pivot perspective. And again, this is not traded for all pivots. This is pivots in the candlestick. So this is a pivot high, a higher low. It's a pivot low, which is higher than the previous pivot low. That's a pivot high. So this is a higher low, a pivot low, and this is a higher high. So from a pivot perspective, this is going to the upside. From a trend perspective, this is going up. Now, let's ask the second question from supply and demand. Now, these are zones. These are supply and demand zones, these lines. We just broke through a barrier over here of supply, which was holding the market down. We went up. The next level is up here. And again, we teach you how to actually find those zones and mark them out. Not every zone is the same, so you have to know how to do it. We go through 10 different types of supply and demand and 7 different ways of looking at it, so you can actually rate them. So there's quite a lot of combinations, but you start to get very good at this once you see the same thing again and again. And the market tends to repeat itself. It's not exactly the same, but similar patterns show up again and again. Now, so from a supply and demand perspective, this is bullish. And because we've cleared above supply and the next level is here and the market's moving to the upside. From a price direction perspective, the direction turned to the upside here. So we're still pointing up here. Direction's still up, it's still up, it's still up, and up we go. So let's ask those 3 questions. The beautiful thing of asking 3 questions is always a majority. Yep. So from a trend perspective, are we going up or down? We're going up, 1 point to the upside. From a supply demand perspective, we just broke supply. We're probably going up to the next level. That's bullish. From a direction perspective, price direction, we're going to the upside. So a 3-prong approach, all say up. What are the odds? The market's going up. Does it work all the time? No, but 80 to 90% of the time, yes, and sometimes even higher. So this is lightly going up, and you should only be on the buy side. The next question is, where do you buy? How do you manage risk? Where's your target? That's not for now. So let's have a look and see what happens here. So when you see a bar like this is what we actually did. These are pictures that I took in the trading room as this was playing out over time. And when you see a bar like this, most people are taught this is a bearish bar, and most people think it's going down now, so they short it. But look what happens. The market doesn't go down, and it goes up to the next level, pulls back, goes to the next level, pulls back a bit, and carries on. So the market goes up. And this is what I said. If you have an idea of how to read the market, yeah, and you apply that to what the market does, and it works most of the time because it actually is the structure of price, then you're onto something. If the way that you're reading the market is a bit shallow, is basic, and you say, well, this bar's bearish, and you think this, well, how do you know when it goes up and how do you know when it goes down? Well, after 20 years of looking at the market, I got pretty good at this, of knowing which scenarios they go up and which scenarios go down. And again, the market has taught me, no one else, nothing else, just the market. Once you've got this framework, you put it into play and you start to understand how the market works. So here's the uncomfortable truth. Most traders know these patterns and yet they still struggle. Why? Because patterns without context are meaningless. So what we're going to go over now is supply and demand. And it's very simple. I like things that are simple. And again, at the beginning, it wasn't simple. Or it was simple right at the beginning when most people start trading, and then you kind of make it complicated, and then you get back to simplicity. But it's simple based on a deep understanding as opposed to a lack of understanding, which is what you have at the beginning. So what is supply and demand, and why is that so important? Well, in any market, this is economics 101, price is always move higher when there's more demand than supply. And price will always move down when there's more supply than demand, and price moves sideways when we have an equilibrium between supply and demand. So what moves markets? Well, some people might think it's the news. Well, if the market's closed and good news comes out, nothing happens because the market's closed. So the news didn't move the market just now. And maybe when the market opens on, if it's over a weekend on Monday morning, it might gap up and then sell off the rest of the day if it was good news. So you have to understand what's going on and why. So really, supply and demand moves the market. And the reason why the market may gap up on that, on the good news, is there's an overwhelming number of buy orders and no sell orders in the market. So the market makers or the specialists have to gap the market up. And if they can't find the opposite side of the trade, the sell side, they have to be the seller of last resort and take the opposite side. And they're not going to sell at a price where they're going to lose at. They have to sell at a price where they're profitable, which is invariably why if they sell at a certain price and there's now the demand is finished, there's no more buyers at that price, everyone's been filled, the market will probably drop down as supply exceeds demand. And as the market drops, they'll take the other side of their original short trade and close out the trade in profit. That's what happens almost every day in the market. So supply and demand moves markets. So your job as a trader is to understand where that is. And guess what? The beauty of this is, which is not how I started, because technology changed the way I had to trade, is the beauty of this is this will never change. Supply and demand are never going to change. It's not going to suddenly not have supply and demand moving any market. That always moves the market. So your job now is to identify what does that look like on a chart. And this is what we're going to look at now, and we'll go into the live markets as well. So the market's going down, and then you see a turn. As the market's going down, we know there's more supply than demand. At this point over here, the demand and supply are in equilibrium. And as it starts to move up, there's more demand than supply. So you want to know, well, why is the market suddenly going up here? Because guess what? There's demand in this area. There's more willing buyers at this price than willing sellers. There's the same number of buying and selling going on. People think there's more buying than selling. That can never be. If you ever looked at the time in sales, it doesn't tell you whether it was a buy and a sell, because every transaction, by definition, someone bought and someone sold. It's exactly the same. You can't buy more than there's being sold. That doesn't make any sense. And you can't sell more than than in the quantity more than's being bought. That can't happen. It has to be exactly the same. It's equal. What we're talking about is willing buyers and willing sellers at certain price levels. Like when the supply is gone at a certain level, at a certain price, and there's still willing buyers that are willing to buy, then the price goes up by definition. That's how it works. And likewise down in the opposite direction. So you have to understand where these levels are. So we're looking at levels, and it's not every level. We're looking at levels where the market turns, but not every level. And again, as I said before at the beginning, you have to learn this from the foundation up and build this so you understand exactly why. So your job as a trader is to identify high probability turning points in the market. And there's two reasons why. Number one is you want to get into trades around those turning points or zones. And the other reason is you want to get out of trades when you hit certain levels as well on the up or down side. So it can help you get in and out of trades. Once you know these levels, the distance between them will give you your potential profit target on a trade. And also where you're going to put your stop as well most of the time. So, and again, the caveat here is, you can come into our trading room. I'm going to share with you how you can do that towards the end of this session. But it depends how you learn. We also have, this in a formalized training online where you can come and go through every part of it. So what we're going to do now is go into the live market. Now, the best way to do it is to have a look at the markets. Now, let's start actually with the dollar. This is dollar index, very important market to understand. And you can see if we look at the market here, and we'll start on a monthly chart, you can see the market stopped on the downside here. Now you can see this is a big move that went right up to the high. You see that? And look at where we stopped on the downside and started to move up again. Now, what's very interesting, you have to understand bases because this is a base and this is also a base. And remember we talked about bull trap scenarios. Well, this is one of them when you break above the base and then come in and break below the base. Here we have the same scenario. Here, this time we break below the base and then we go above the base and now we come back in. Again, this is understanding basis. It's basic price structure. But you can see what's happening now. We took out this high and we come back in again and the market's moving up. Now, why is it doing that? Because on a smaller time frame, we also hit an area. You can see here, I've marked this out as a demand area. This is a weekly chart. This is a supply. And again, you can see today we changed trends here and came down and put in a lower low. But the reason why the market's going up now is for a different reason. This is what I call an extended move below demand. Most of the time you get a snapback because people are selling this and it's not the right thing to do most of the time, at least not initially. You usually get a snapback, which is why the market has started to move up again. And if we look at this on the hourly chart from today, you see the market gap down. You get a gift hit when the market runs back up here. This is where you want to be on the sell side for today. And again, this is also the base, move above, move in, and kick off to the downside. So that was initially. And again, this works on every single time frame, every single market, and we can see the same thing on the other side of the euro. And you can see also what's happening. Now let's have a look at another interesting market to look at. Let's leave it. Let's go to gold. And I want to also show you Bitcoin. So gold's exactly the same. We have levels. These are levels of supply above the market that if the market can't get above these, we may continue moving down. This changed the trend when this happened. So when this bar closed, it's highly likely this is going to go down. You see you have one of the biggest weekly moves down, but look again where it stopped, right into this level, which we call demand. I'll show you a few other markets. Another very interesting market is Bitcoin at the moment. Now, this is even we've called almost ever. This is a very simple market to see what's happening on the bigger picture. And I'm going to show you that now so you can see. And again, the levels. On the way up, you can see every level we've marked out. When this goes up, you want to buy the pullback here. But what happened here? This is the top of the market. And the market breaks out and to new highs and comes back in and kicks off. Remember, this is the base. It's a bull trap scenario and comes in and look what happens immediately afterwards, a month after we have a move down. Now we're no longer in an uptrend. And what we said, when you hit demand in a market that's no longer uptrending, you usually move up and then go lower, which is what we've had happening the past couple of months. I mean, this month we moved up. We're still moving up. We still have moves up in downward moving markets, but look at where we're going. The odds are here, most likely we're going to take out this low and if we don't, then I know the market may start to move up again. So this is how we do it. And you can see also, you can see how big a move it was. And if you go down to a smaller time frame, this is a level that went up and we came on the other side of it and look at where we turned. As we were in our trading room, we said, you don't want to be on the buy side here. You want to start thinking sell based on the bigger time frame. That's how we put everything together. And let's also look at another interesting market. And again, you can type into the chat area if you want markets that you'd like me to look at. Again, this is another interesting market. This is the yen futures. futures market. Now, again, you can see the market is kind of sideways, and you can see we're right at the all-time lows over here, or at least what I can see going back, you know, all-time lows. And you can see this as the top. You see this was what I call a reversal bar that breaks the trend. And therefore this move up is not a buy, it's actually a sell, and you get a massive, massive move down. And then you get this scenario over here, which is very interesting. And you've got to be very careful when you're at all-time lows because it's demand, and you can see you can get intraday spikes to the upside. You can see this here, but look where they stop. They stop at specific levels, like here above, which is this level now. Once you've broken down, what we usually do is I'll go through and I'll find the level, which is here. And you see this broke through it into kind of the level above. And then we get stopped here again. And the fact is that every time we're jumping up, we're not jumping up higher, which means unless we take out this, more likely we're going to break the lows. There's another reason. So this is looking very likely to break the lows, but we still may get another move up. And again, if we look at this, it's also a base. And notice this base here, we went below the base and back in. This was a prime time to go long and take it above the base, which is what happened here. And then we came back into the base, which means we're more likely going to break down. Okay, this is just understanding price, understanding structure, understanding price. It doesn't work 100% of the time, but it gives you a good reading of what's going on in the market. And if you don't know what's going on in the market, how can you trade well? Think about that. Most people are strategy based, are looking at strategy without context. That's not the way to do it. You want to look at Tesla? We can look at Tesla. I think I might have zones. No, yeah, I do. Let's go put them on monthly. You can see weekly. You see how these levels stop, and maybe I've got the daily as well. Nothing on there, but and this is from way back when. I don't know what that is. Let's remove that. And again, we could actually build them from scratch as well. But look at what happened here. Here, the market took out the high and came back in, which kicks off a move down. But look at again, you can see the way this is moving, how the levels work. Once this moves, again, I haven't adjusted these for a long time, but what we would do is we'd usually take this off and let's go and actually put some zones on, and you can see what's going on the monthly chart. But this is the top of the market. Yeah, this changed the trend. So this move up went back to this area. So this is what I call a V-shaped pattern. So this has an element of bullishness to it, the fact that we went all the way back up. And then we can mark out levels below as well. This was also a level that we can mark out, which is why the market turned here. V-shaped pattern here. So the first move up couldn't take out the high and it came down again, but then the next time we could. So usually this is how that works. So we can look at that across the multiple time frames as well. Let's just remove, and you can see we get trapped between zones, causes sideways price action. Let's remove. We can remove this and start again. And again, this is the top, so we mark it, and you can see the trend. This is a reversal bar, so the pullback into here is buyable. So this is what I call demand. And you can see if we mark it that way, this pullback here is great. Now, but today, at the end of the day, or at the end of this week, this may change trends again. It's not going above here, and it looks like anything can happen. We gap down as well. So that means we may have some downside, but you have to know where we're going from and to. So this is like kind of how we do it. And you can go down the time frames to the smaller, and you can see this just is the way it works. If you mark levels on the smaller time frame, you can see this is a supply area. So what happened when the market ran up here and immediately reversed. And then we can mark out where this move started, and you can see this is where the market is going in this sort of range at the moment. Okay, we can do this pretty accurately most of the time. We can map out the market based on these levels and know if you suddenly run hard into this area, it's probably not going to break it. Okay, let's have a look at, let's look at the E-minis. So again, this is what's happening today. What just happened? we just ran hard down into this is demand. So what's happening today? The market's going up again. And if you look here, you can see this happening. You can see the market starting to move up. There's a number of reasons why we had a big bar down. It's also a reversal bar off the high, so we've got to watch and see how far up we go to know what's likely going to happen next as well. But you can see this is a very, very strong trending market, and but it may, I mean, it may potentially top out. But again, we've said most of the time this is going, I mean, this is one of the biggest runs that we've had. This is the biggest 2 month run, I believe, that we've had in the history of the market. These two is much bigger than any other 2 months that we've had on the upside, and completely solid bars. I mean, especially 2 months ago. Compared to this, look at these moves. I mean, compared to this as well, big moves. But we do have time, we do have room to pull back, but you have to see that on the smaller time frames as well. As we said, it has to break through a level and then it will go down. You have to know where the next level is, for example. Right. So that's basically what we're looking for in a nutshell. We're looking for areas. I mean, let's have a look at one more market. Let's look at. Could look at the Nasdaq. Let's look at oil. The oil's been interesting as well. So again, look at what happened this week. The market's kind of, we've got this kind of wedgie pattern over here. We've got lower highs and higher lows, and we broke this down last week, 2 weeks ago, not this week. So the move up to this area, you see, we marked out. Look where the market stopped this week and went down, and that was basically here. You see where? So if you know where that level is, then it's highly likely on the move back up here, once you know where that level is, and once the market's broken structure, for example, here, then this move up here is going to at least go down. And that's what the move is today. And if you go down to smaller time frames, you can find a way of managing the trade, of getting into the trade, and then actually taking some of this, for example. Now, one other thing that I want to point out, which could be extremely interesting, is I think it's this one. Yeah. The monthly chart here is looking very interesting. If this month closes here, this could be the bottom of this market. Again, notice reversal bar, weaker supply area in demand, and we may pivot here and change direction to the upside. So if all this happens, the odds are we're at the low that this may come. If it breaks here, we've got room to run, got what I call tradable void between levels here. So that's an interesting thing that we can look at going forward. So let me share with you that we looked into the market, and again, look at how this works on every time frame. We go down to this level and then we come back to this level that we just broke. You see that? You see, when we came down into this level, and now we're bouncing from this level. And this is what I call an extended move below demand into demand, makes it even higher probable that we're going to go up. We're not going down anymore, at least before we pull back. And you can actually see the trend on the smaller time frames as well. You see the higher low, higher high, higher low. We can see that. So you can buy pullbacks here on the smaller time frames until we get up to the next problem area. And again, that's how you do it. But you have to understand where those levels are and how to read them. So I worked with a trader who could identify supply and demand perfectly, but still couldn't hold trades. The issue wasn't knowledge, it was decision making under uncertainty. Once we gave him a trend framework that removed ambiguity, his behavior changed almost immediately. So this is the part I'm going to share with you how you can take the next step if you want to learn this. So the best investment you can make in life is in yourself. And as Jim Rohn says, for things to change, you have to change. For things to get better, you have to get better. But you have to let your knowledge lead to action. Okay, knowledge by itself doesn't help anything. You have to do something with it. So let me pause here for a moment. Everything you've seen so far today is intentional. This isn't a strategy, and it's not something you memorize. It's a way of reading the market. Once you see it, you can't unsee it. But here's the part that most people don't like hearing. Understanding this once isn't the same thing as being able to execute it consistently. Most traders on this call will get it. And then under pressure, they still hesitate, second guess, or revert to old habits. Not because they're incapable, but because this kind of clarity only becomes natural through repetition and exposure. That's why I don't just teach this in a single session. I trade it live. I explain what I'm seeing in real time, and I show you how decisions are made in the market as the market unfolds again and again. If this way of reading the market resonates with you, the next step isn't to go look for more information. The next step is to stay close to the process while it becomes natural. And that's exactly what I want to show you next. So take it a step further and learn how to read the trend using pivot analysis. Now, what are the benefits of knowing how to read the trend? Trade in the direction of the trend. And we just showed a few examples of that. The trend is your friend, and most people forget the last part of it until the bend in the end. And that bend in the end is usually where it reaches supply or demand, or the price structure tells you, once you know how to read that, what's happening. You'll know exactly when a trend begins and ends. It's not ambiguous, it's exact. And make sure that you're never fighting the trend. Make sure you're on the right side of the market, and this will help you develop a profitable trading strategy or enhance an existing trading strategy. So again, this is my offer for everyone here to take the next step. So join my How to Read the Trend training session, plus come and join our trading room. And this is what you're going to learn. You're going to learn how to identify the current trend of the market. We do this every single day. How to analyze the trend in multiple time frames. How do you reconcile, the dailies in an uptrend, but the hourlies in a downtrend? What do you do? Know exactly when a trend begins and ends, and how this knowledge will dramatically affect your bottom line. By watching us analyze and trade the live markets in real time. And then start applying it yourself and seeing it yourself. As I said before, as you start to see it, you can't unsee it. Once you see it, you can always see it, and it will change the way you look at the market from now and forevermore. And this is what people are saying. Simon, this is phenomenal. I've been trading, studying for 3 years. Sadly, it's all been the wrong process. I've wasted tons of money, time, and effort. I've actively deleted all those programs, indicators, and now completely focus on what I've learned from your program. It's the only real way to trade, and it makes complete sense. Tom, I wanted to say that what you teach in How to Read the Trend training course is brilliant. Before that, I'd picked up bits and pieces from different traders, but it was never joined up. Your course brought it all together in a very structured and algorithmic way. No guessing needed. The facts jump off the chart. Matt, the trading room is very helpful in understanding how to go through the process. That's exactly what we do. I've been trading for 11 years and I have not seen anything like what you do. Love how simple it is. I mainly trade options with trades that last 30 to 60 days. I've been looking for something I could use to day trade now for 2 years. Yeah. I want to round out what I'm doing with another source of profit. I have not been able to find anything I could execute consistently. I'm just paper trading with your system, and I've been doing it for a couple of weeks now, and I've had far better results than anything I have ever tried. This isn't about learning more. It's about seeing the same information differently, consistently, under pressure. The fastest way to do that is exposure, watching the process applied live repeatedly. So this is what you get in this training. It's about an hour and a half, and you can go through it as many times as you like. And the usual price is $497. It's been the same price for years. I've had all sorts of traders take this training, from institutional, professional traders who just want to, learn something new or reinforce what they already know, and to complete beginners and everywhere in between. It's on demand. Again, you can watch it as many times as you want. You can, ask questions if you want afterwards. But more importantly, you're going to get 1 month access to the live trading room, and the subscription to that's $497 a month. And again, that's been the same for years. You get access to our online trading community via our Discord server 24/7. You can connect and trade and find a trading buddy if you want, and connect with other traders. Entirely up to you how you use that. And that's the key to actually learn something and then see it being applied in practice in the live market. That way you start to learn what's going on. So here's our trading community. And again, this is important because this is about building a skill you use for years, not a one-time trade idea. Okay, so this is if you join now, the regular price for the trading room and for the trading is 994. The deadline's 2 days from now, or probably 2 days from when the replay goes out. And you're going to get $497 off. So basically, you just pay once $497. You go through the training, and then you come and join the live trading room. If you can't make it live, you can watch this. It's recorded every day, and you can see it applied in the live market. We say most of the time what the market's going to do based on the probabilities before, and you'll see it play out that way almost every day, most of the time. And you'll be amazed. You'll amaze yourself, and then you'll start to do it yourself and go, huh, the market's going to go to this level and turn, and you see it. And again, if we go back, you can see in the live market now, if we go back and just look at what's happening here, you can see the market come up here and look where we come down to. We broke this level and then we're coming back down. We came up to, look, this level's marked out ahead of time. We came up to this level and where did the market do? Come back down to this level. We came down to this level. This is a level and the market turned and went up. Sideways market. At least this part, sideways market. See? The top, the bottom, and this is the last. This was the where we came down, and today we went up, and look where we turned. And invariably, if you look at it on the smaller time frame, you'll see the trend change there. Look at a 50-minute chart. There's the lower high, there's the lower low, there's the lower high, there's the lower low. Trend change in supply. Put it all together with direction. You can get in, manage your risk, know where it's going from and to, and do it consistently, and pick whatever trades you want, whatever the risk profile that you want. If the market doesn't set up exactly as you want, you don't trade, but at least you can read what's going on. Why is the market going down? Well, it hit this level on the daily chart. And we start to look at this. This is kind of also a bit sideways at this level. And look where we stopped. We stopped at the highs. Look where we stopped down on the lows. This is demand. This is also demand. When this formed, this is demand. So the move down here turned. We said that when it was happening, and then you can watch that on the smaller time frames. So let me show you very quickly. And again, so if this way of reading the market resonates, don't sit with it. Understanding without reinforcement fades quickly. The people who get results are the ones who stay close to the process while it becomes natural. So here's a link that you can go to join up, and I'll show you that process in a bit. But just to show you that if you join now, the how to read the trend is $497. 1 month in the live trading room is also $497. The total is $994. This is the page that you go to, tradesmartforex.com with the number 4/promo. You pay $497. It's been the same price for years. We've been doing this, and we've had many successful traders come through this program and come out at the other end with, much better than they were when they came in. So let me show you quickly so you come to this page and you click buy now, and it brings you to the checkout. And again, it says PayPal email. You don't need a PayPal account. If you have one, great. If you don't, just put any email in there and it will give you an option of paying with credit card. PayPal is the one that processes the payment. Also notice it says monthly. You can cancel any time, okay? And if you happen to pay for a month and you don't want to use it, just let me know. And, I don't want people to pay for something that they're not using, if that makes sense. So, but you'll probably find it extremely useful, and it may be what your trading needs. And again, once you sign up, you'll get emailed your login credentials, and you can come in through our website by clicking on members, which brings you to the membership portals. Yeah, there's a number. The training's in here. The trading room's here. And this is what it looks like on the inside. You can join Discord from this level over here. And this is the session. And the trading room is a separate login. Well, you can use the same login, but it's a separate area here. You have to go into this area. And we have the live trading room schedule here, and the access to the live room is through here, and the recordings are here. and the weekly preparation session, which is a standalone as well, but you get that as well. And we keep a rolling two, the previous week and the current week. So you can go and have a look at what happened 2 weeks ago and see how the market played out, and you'll see, are we getting it right? I was audited a number of years ago by a postdoctoral research fellow at Princeton University, and it came out our accuracy was somewhere like I can't remember exactly the numbers, but it was close to 90%. And he went and audited about 8 months worth of data. So yeah, so that was pretty good. So that's what you do. And this is what I'll leave you with. Understanding is one thing, execution is another. That's why the trading room exists. Not to give signals, but to build pattern recognition and decision confidence. And once you have that, you'll be able to do this by yourself. You don't, as a trader, you want to become independent, not dependent. Dependent is not good. If you're depending on a certain service and that service stops, what are you going to do? You need to become independent, make your own decisions, and have confidence in those. And this is what we can help you to do. So open up. We've got about a minute or so. We've got questions. You can, if you want to ask a question and you don't want to ask it now, or we run out of time, you can email me, simon@tradesmartforex.com, and I'll be happy to answer your questions. At this point in time, since we're almost out, I'm going to say huge thank you to John and the team at Mad Hedge for setting everything up and for providing the service for traders. I think it's an amazing thing. I never had this when I started. So I think anyone, I mean, who's here has got access to lots of trading education knowledge and can see things from different perspectives and find something that fits your personality and lifestyle, something that resonates with you, and then go for it. That's what I
Simon,
would say.
thank you very much. Great presentation. The reason I started this 6 years ago is I wanted to create a community of educators who all had the same goal, educate the public and help them make money. Because we know there's so many fakes out there, we want to steer them to the right people.
Yes. Yes. And the proof actually is in the results that you get for your traders.
Oh,
That's
absolutely. Um, you know, all the time we hear of people who have made millions off our service. And then they disappear. They retire and we never hear from them again. I had one guy turn 1 million into 82 million and he won't even return my phone calls. He's moved on to another life.
Yeah.
Anyway, thanks again. Love to have you back. And just to remind everyone, the link to Simon's service is in the chat box on the right. There it is. It's trade. Let's see, there it is again at the very bottom of the chat box, trademartforex.com. That'll
Yeah,
take you to
you've
the
got it here as
dedicated
well.
sales page, which is only available today.